All right, Chapter 13 homework. Number 2. Oh my gosh, I'm crazy. All right, Colorado Corporation has 2 classes of stock: common with a $3 par value and preferred with a $30 par value. Journalize Colorado's issuance of 4,500 shares of common stock for $6 per share. Okay, so we're going to get cash. Common stock is going to be credited because it is being issued and equity is increasing. And then I received $6 per share. It has a par value of 3. So I'm also going to have paid in excess of par. All right, so my cash, I'm getting 4,500 shares times $6. Common stock, the most you can put in the common stock account is par value. If it has a par value, that's the most that can go in there. So 4,500 times 3. And then paid in excess is the difference to make it balance out. In this case, it's the same number because it sold for $6, par value is 3, so paid in excess is also going to be 3 per share. All right, number 2. Journalize Colorado's issuance of 4,500 shares of preferred stock for a total of $135,000. So we're getting cash of $135. I'm sorry, $135. And very similar to above, preferred stock is going to be credited, and it's the number of shares being issued. So 4,500 shares times the par value of 30. In this case, that happens to be the same amount, so there's no paid in excess. All right, number 7. We're paying some dividends to our shareholders. So we're going to do the journal entry for declaring the cash dividends and for paying the cash dividends. All right, Java Company earned net income of $85,000 during the year ended December 31st of 2018. On December 15th, Java declared the annual cash dividend on its 4% preferred stock with a par value of $120,000 and a 25-cent per share cash dividend on its common stock, which there happened to be 50,000 shares of. Java then paid the dividends on January the 4th. All right, so the entry when they declared the dividend, all right, I'm going to have a debit to cash dividends, and I'm going to do them for each one separately. Cash dividends preferred, cash dividends common, and the credit is to dividends payable. And I'm just going to do it to the one. All right, so the preferred, that 4%, they get 4% of par value. That's their dividend. So it's the 4% times the par value of $120,000. All right, the common shareholders get 25 cents times the 50,000 shares. Apparently put a dollar sign in front of that. So 0.25 times 50,000. And then you just add those 2 up. All right, then on January 4th, when we're actually paying them, the liability, the dividends payable is being paid. So you're going to debit that. You're going to credit cash. And that's it when they're paid. And that's it for Chapter 13.